Welcome back. Well, let's shift focus to the commodity markets now. We have Manisha joining in. Manisha, it's a happy Friday for equities. You tell us what's up with commodities, considering the dollar is falling so dramatically. What does that imply?
Oh, absolutely. I'm looking at the copper prices because metals, when you look at the month of June, clearly have been outperforming. So while the crude prices are consolidating and gold really hasn't done so much, but it really is metals, and within that as well, it is copper that you have to keep a look on, because we've seen overnight gains in copper to the tune of 2.5%. For this week now, we are at 5.5% for copper. And for the month of June, as I said, we're looking at 9% of gains coming in for copper, and clearly outperforming 2025 for many of those base metals there with nearly 28% of gains. So copper, clearly the next gold, is what the street seems to be talking about. That phrase has been coined, and we've seen copper kind of live up to that. Well, Iran-Israel ceasefire is one of the factors that has led to some support coming back in case of industrial commodities. And then the markets also are looking at the weakness in US dollar index, which is trading at a 3-year lows. That has been supportive. Take a look at the demand-supply numbers as well, and that has been supportive. When you look at the spot prices, they are trading at a $300 premium to the 3-month futures. So that tells you that the demand in the very near term is on the stronger side, and we have seen backwardations go all the way up to 2026 June. So that tells you that there is supply concerns absolutely coming in. The ready available inventories have declined by 80% in 2025 till time. Well, actually, it has been a 60% of a decline from the month of March itself when it comes to inventories. And with the kind of inventories that LME is holding at this point in time, is perhaps just good for 1 day of global demand. So there are concerns coming in because of that one. Also, when you look at supply disruption, well, we've seen that also continue into the trade there. There are risks on tariff. You could be looking at tariffs coming in copper. US has been talking about it for some time. And then refined copper shipments to US are at multi-decade highs of around 2 lakh tons. So everywhere that you look, you're looking at very strong copper fundamentals there. I also want to take you through supply disruption concerns coming in from Chile and Congo as well. Well, whether it has been about refined copper, supplemented copper, or mining itself, there have been some disruptions coming in. If you look at the consumption in the meanwhile, and that comes in from IEA's data, which tells you that in 2023, while we did see 26.5 million tons of copper demand, by the time it's 2035, the copper global consumption is expected to gain up by almost 32.6 million tons. Much higher, and well, no, we're not looking at supplies increasing in the same way. The consumption for the clean tech is expected to gain much higher. 6.4 million tons in 2023 is expected to be at 11.5 million tons by the time you're in 2035. Well, this demand comes in from EVs, from chips, from transportation, from construction, and of course, energy transition. There's an important statement coming in from BHP as well, which say that the copper mine grade is constantly declining. They also say that where we were at least a couple of decades ago, the grades have continued to decline. The mines also are facing aging challenges. So on the mine side as well, there are concerns coming in. And more interestingly, the University of Southern California says that next 20 years, the kind of copper demand that you would be looking at is the kind of demand that you have seen until now in all of these years. So with those kind of numbers coming in and everybody putting in a very, very bullish tone for copper, the prices have only one way to go, and that's higher.
Okay. Got it, Manisha. Thank you very much for that.